days ago, Toyota paid me 2,000 yen, tax-free, zero tax taken from Japan. Then in another video, I show you about my Starbucks dividend. The US took 10% tax from my dividends, and then Japan took zero tax. So I received $32. Today, this is my Hitachi dividend payment slip. I received 1,890 yen, but before I received the payment, Japan took 383 yen of tax. I'm going to explain to you why I have one investor, one portfolio, and I have three different outcomes in taxation. So I'm going to show you this in my actual Rakuten Securities account with real numbers, so then you understand the mechanic, why it looks different between three stocks, three different outcomes. This page here is about the dividend when you receive dividend. This is the report of dividend. So I'm scrolling down and you can see here the first line. On the 4th of June, I received Hitachi dividend. The Hitachi ticker is 6501. I own 70 shares. The dividend are 27 yen per share. I received 1,890 yen dividends. Japan tax withheld before I received the payment, so 383 yen are withheld, and I received actually 1,507 yen. So why is it different with my Starbucks and NTT or Toyota? You can see below the Toyota. The Toyota this is Toyota here below NTT. Toyota ticker 7203 is sitting inside my NISA. So the NISA has absolutely no tax because it is a Japanese stock, so it doesn't matter about the US stock. I mean the US don't take any tax from Japanese stocks if you hold them within Japan trading account. So this is why I received 2,000, 100% of my 2,000 yen, and it is the same for my NTT shares. I received exactly the amount. There's no taxation. And then for Starbucks, here's different here is because it is a US based company. So before I receive it, the US takes 10% tax from it. So I was supposed, I'm not supposed, but it supposedly I received 35.96, but because it is withhold 10%, I receive 32.36. And here is the difference with Hitachi. It is not inside my NISA, it is sitting inside my taxable account, and this is why I am being taxed the Japanese tax of the tax rate of 20.315%. So now let me explain you about the 20%. The 20% taxation is actually, sorry, I have to be precise. The 20.315% is actually 15% as national tax, and then 5% are for the local inhabitant. So from that 5% is 3% for the city where you live. So in my case, it's Matsumoto. So 3% tax for Matsumoto city and 2% for Nagano prefecture. And this is 15% national and 5% for the local, and then that 0.315% is actually, it is a sub-tax or surcharge to help the reconstruction of after the 2011 tsunami / earthquake that happened, and most famously in Fukushima area. So since 2011, this tax is it is a surtax because it's a tax based on the tax. It is actually 2.1% tax added to the 15% national tax, right? So this is a tax on tax, and it is being withheld from the dividend or any profit you make, even from your salary. So this is the explanation for the 20% withhold from my dividend. Now let's turn to Hitachi, specifically why I hold Hitachi. So Hitachi is sitting here at 5 point, as of today, little bit more than 5% of my portfolio, and I bought it actually this year, so that's why it's not in my NISA account. It's because my NISA is already full. So, but so it was a good. It is a good company to own for me personally, for my portfolio. This Hitachi is being. It is going through the transformation of the company. Is getting more effective. And this company is actually Hitachi is actually benefiting from the infrastructure investment, especially for the energy. So this company has a big moat in infrastructure and energy, transportation, railway, and also it is probably the world leader in optimizing factories with AI intelligence. So they are basically helping company to become more effective. So they are right now for the next 20 years, they are expected to be a growing company in this market, as they have their own original software and AI software, and they are working on developing on improving factories efficiency worldwide. So that's why it's a very good play, in my opinion, because I needed industrial company within my portfolio. So looking at the 1 year trend, you can see it's growing. It says 21%, but it's not, well, it's not a growing company like AI or those things, but it has. I like the fact that it does have a kind of safety side to it. That's why. And if you look at the progression, it's from 1 year to. So actually, this is Google Finance. I always use Google Finance to give me a visual point of view of the trade or the companies I look for. So if I go to 5 years, you can see the company is going very, very well within the 5 years, especially since 2023, it went up all the time. So of course, always going up is ideal, but it's not all the time. So we look at the numbers. So the PE for 28 is a bit high for a Japanese company, but the quality of the company is very, very good. When I mean the quality, I mean financially. So this is a quarterly. If you go down the Google Finance screen, you can see the financial statement. So you can see for the income are kind of trending up for the last 4 quarters. And if you look annually, it's pretty, the growth is steady. And very important, you go to the cash flow, and you can see the cash flow is very, very good. This company, free cash flow is 1 trillion. It's a big number. It's a big number. So it is very, very good company to own. It's in the news regularly. It does partner. It works hand in hand. It works with GE Genova, for example, a lot, with Intel recently, with Google Cloud Alliance for the physical AI. Physical AI is actually what I was meaning about the factory. It's connecting the robot in the factory with AI. So this is what they call now the physical AI. So it is it is working a lot on this market, on this category. So the price year range is 2008 as a low, 52 weeks low, and 52 weeks high, 6,000. It is now sitting at 4,900. So it is closer to the high than to the low, but it doesn't matter for me. I plan to hold to this position whenever it goes down. If it goes up, I will keep up with that company also. So as I said, it's 5% of my portfolio. It's not a big position, but it's a position I hope to keep longer. as it goes, and maybe into 2027 I will add it into my NISA. I will add new position to the NISA to capitalize on the dividend, to save on the dividend. Voilà. So as I said in the beginning, it is 3 stocks, 3 different outcomes, despite it is going inside the same portfolio. So this is very important for you to understand. If you have a NISA available, please use it first, fill your NISA, and then whatever, if you want to keep trading and buying stocks, well, you use your taxable account. But please understand, the NISA is working for you to help you save money, especially if it's for tax. It's better you use money for something else, more useful for you personally. Right, I hope it was being helpful video. Subscribe and catch you on the next one.